Friends, the Indian startup story, which was flying, high a few years ago, seems to have tapered. And with only 3 unicorns added in 2023, the last year. Our unicorns valued at $1 billion or more are now down to 83 from 100, which was a few years back. Now, possibly their business models were unsustainable and faulty. Even as they led to lesser valuations, stressed the funding to the right companies. Friends, what is a bigger concern is the slowdown in investor interest, or funding winter. Investors are loath to giving funds now, which is setting in. That said, revival will need several primitives, building blocks, to be factored correctly. We have a lot of catching up to do with our favorite neighbor, China, which has over 1,000 unicorns. Even the projected $5 trillion economy will certainly depend a lot more on our startup ecosystem doing well. Startups is the theme, friends, for this Saturday. However, not everything is lost, even as the startups are going down. Though 18 companies dropped off the list the last year, there were over 40 new additions. With the business rules easing up, the overall number of unicorns may even cross 200 in the next 5 years. The optimism is based on the fact that we have 147 startups valued at over $50 million in 2023 compared to 122 a year back. Further, Hurun India says there are geezers valued at over $500 million which are likely to turn unicorns in 3 years, and cheetahs valued at $250 million likely to turn unicorn in 5 years' time. So there are different grades all there in the ecosystem. How are successful unicorns built? That will be useful to many of us. A combination of several factors, several key factors, and strategies are required, as each unicorn journey is very unique. The ecosystem must foster innovation to start with. It must allow collaboration and employees' growth. Attracting skilled professionals who are aligned with the company's mission and values helps fuel their growth and success. It all starts with a groundbreaking idea or a disruptive solution that addresses a significant problem or untapped market opportunity. One must do a market survey to realize all this. That needs new technologies, business models, and products that have the potential to revolutionize industries and create substantial value. The products must address global large-scale markets rather than niche segments, small segments. Early stage funding is critical, and many potential startups secure funding from venture capital firms, angel investors, or strategic partnerships. Though the key is really effective utilization of that fund. However, what is most crucial besides funding is the timing to enter the markets. Emerging trends, technological advancements, or shifts in consumer behavior, they all help. Even strategic partnerships with established companies leveraging their networks resources, and expertise is extremely important. Many startups turn bad because the execution of their plans was faulty. With no clear vision or well defined strategy. The leadership team must also be found wanting in those cases. They have questionable domain expertise and no ability to navigate challenges. Of course, economic recessions have a significant impact on the startup ecosystem. Investors may become more cautious and risk averse, leading to reduced funding for startups. Consumer spending may decline, affecting market demand and startup growth. Then again, certain startup sectors can become saturated with numerous companies competing for limited customer attention and resources, leading to a slowdown. Investing in the right sector is equally important. Sustainability, clean energy, health tech, telemedicine, fintech, digital platforms, payments, e-commerce, direct to consumer brands, D2C, AI, ML, EdTech, online learning, food technology, agrotech, cybersecurity, and data privacy. They're all absolutely great areas, though it is important to conduct thorough market research. Any startup will need a good market research. Identification of specific pain points is important, and developing a unique value proposition when considering a startup idea is a must. In spite of the best research and effort, many startups fail to reach unicorn status due to various factors such as market conditions, competition, internal challenges, and execution gaps. While there is no one-size-fits-all approach, availability of funding, tax incentives, and startup-friendly regulations attract investments. That's where the government comes in. Promoting entrepreneurship education, organizing hackathons, and supporting incubators, accelerators help develop a skilled talent pipeline. Availability of exit opportunities such as acquisitions and initial public offerings, IPOs, provides a favorable environment to investors and entrepreneurs. Universities must do their job, the industry must handhold. This helps generate returns on investment, attracts further investment, and creates a positive cycle within the ecosystems. Building a unicorn is a challenging journey. We all understand that. Setbacks and obstacles are inevitable. One who can navigate that becomes successful. Successful unicorns therefore exhibit persistence, resilience, and the ability to learn from failures. They adapt their strategies, pivot when necessary, and remain focused on their long-term vision. Establishing programs that facilitate knowledge exchange, mentorship, and guidance is important. Our MBA programs must innovate and promote a culture of innovation, experimentation, and risk taking. That's where the universities must concentrate, along with help from the industries. Friends, celebrating entrepreneurial successes, showcasing role models, and providing recognition and rewards for innovation can inspire and motivate aspiring entrepreneurs. The point is, where will that come from? It's a collective effort from the government, the universities, the industry, and the society. With that, I will remain for this Saturday with a promise to be back the next with another episode. Until then, Thank you. Dhanyawad and namaskar.